Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is your host, Steve Meisinger. I'm the Director of Education at the International Securities Exchange, ISE, and we are a leading options exchange. We're also a leading exchange for ETF and FX and index products. And we give webinars each and every week, Tuesdays, where we start our Tuesday afternoon with our FX program. But now we're on to our ETF program. So I'm pleased that we have Mike Tosaw with us, and Mike is going to be talking about considering diversification using ETFs and ETF options. Mike Tosaw is an investment advisor representative at Know Your Options and is known for his ability to cover questions that range from simple to the most complex. His audiences around the country include online traders, investment clubs, independent representatives seeking education about online stock and options trading. Mike, I've worked with Mike on numerous occasions, and he is really a pleasure to work with. He is very, very knowledgeable. Without further ado, I want to introduce Mike Tosaw. Mike, how are you?
I'm doing great today, Steve. And in a market like today, if you fell asleep looking at your computer today, watching the markets, then I think you need to check your pulse, quite frankly. Now, if you fell asleep maybe because you had a heart attack, that's a different story. But if you fell asleep because you were bored, then I think you really need to check your pulse, quite frankly.
Good point.
So with that, let's go ahead and get started. Why don't we do a quick sound check for those of you in the audience, just to make sure that you can hear me. Just maybe type yes in the chat box, if you would, please, to make sure, so I can make sure that I'm being heard. Okay, I'm getting some yeses, so I'm going to go ahead and proceed. If you're not able to hear me, please let me know. Well, I guess you wouldn't be able to hear me, so never mind. Today's presentation, natural gas. We're going to be talking about the ways in which we like to use ETFs, ETF options, and just various things to exposure in the natural gas market. One of the things that we're really excited is the ETF with which the ISE has rolled out now, FC. Talking about that a little bit today, and I'll be using it in some examples. But naturally, it's kind of a unique little facet to today's marketplace. I've had a good questions on this. And if you have questions during the webinar, feel free to type them in the chat box if need be, and I'm more than happy to answer them during the webinar. But if they can wait till the end, please be respectful to people in the audience, and that would usually makes everything flow a little bit better. Before we proceed, we do need to mention that options do involve risk, and we strongly recommend the characteristics and risks of standardized options available by going to the web page disclosure. You can also get the characteristics and risks of standardized options, and thing where I think you ought to really have a good understanding of risk and what's any trade before placing any trades in the option marketplace. Now, the other thing that we're not going to factor in transfer fees or taxes. It's for the sake of simplicity, folks. And one thing that if you want to, like what our fees are at Know Your Options or our commissions, I'm more than happy to talk about them at the end. The purpose of today's presentation is for education, and it's for if you're looking for education and selector or for tax considerations and that type of thing, there's other webinars for that type of thing. But today,
is there any way that you can improve your sound, Mike? The sound seems to be cutting in and out.
Let's see, how's this right now?
Maybe a little better if you were on speaker. I'm glad you took whatever you did. Let's just do a sound check again.
Okay, let me just talk for a little bit more. How is this sounding right now?
I hope it's better.
That's good.
I hope you're not being interrupted. Okay, good.
Okay. if it does crack up again, let me know. I got an idea. I can just if it gets too bad. So anyway, let's go ahead. We're going to be going through some that we want to talk about, and at the end, what we'll be doing. And you know what? I'm going to go ahead and dial in. I'm going to redial in just to make sure that the sound is okay and we can get this right, folks.
Okay. All right.
I'm going to dial.
You know how to put the conference code in and all that, right, Mike?
Yeah, I'll dial in the same way I did.
Okay, great. All right, so we're just going to wait, Mike.
Sorry, folks.
I'm going to use a different phone. You could, just, I think you can call out and call back in, and you're good. Sorry, guys. And we'll wait for Mike to come right back. As Mike said, you should get a copy of the characteristics and risks of standardized options. It's available through your broker. You could also call 1-888-OPTIONS or the optionseducation.org website, and you'll be able to do that. And any examples that Mike gives today are just examples, and they do not include taxes, margin, or commission. Those are very important factors. So Mike will hopefully be back real soon. Let's just see. Again, Mike is with Know Your Options, and he will be talking about natural gas. Mike, you there? He will be back in a brief second. Mike, you there? Mike is still calling in.
Can you hear me?
Yes. Good. Thanks, Mike.
Okay. All right. Sorry about that, folks. Sometimes things happen in the audio world, and that's the joy of doing a live presentation, I guess. So my apologies on that. Anyway, for today's points to ponder, we're going to be going over what is natural gas. We'll just kind of define it, give you an idea of what it is, who uses it, that type of thing. We'll be going over why you actually need to know about it. Why is it important? What does it affect? Who can be affected by a rise in natural gas prices? And I have some personal stories to tell you about this. We'll talk about ways with which you can trade it through stocks, ETFs, options, futures, the pros and cons of each. We'll go over why you would consider trading it. We'll go over the debate of natural gas stocks versus natural gas itself as an investment. We'll talk about the ways with which we trade it, and then at the end, we'll talk briefly about what we do with Know Your Options. First off, what is natural gas? Well, by definition, it's a fossil fuel in a gaseous state. Okay, I confess I just wanted to say the word gaseous, I guess. I've never said that before. I sound so scientific. But the bottom line is that this is used for cooking and heating homes. There's some other uses for it as well. For the most part, it's used for heat. Like Steve was talking about when we were getting started here in North America, there's quite a bit. It's not warm here right now. So there's definitely something to be said for the blessing of natural gas that's keeping us warm and keeping me warm personally right now as we speak. It plays a role in heating and various power sources. Now, who does it actually affect? This is something that not a lot of people really take a look at, but here's some areas in which it can be affected. Dry cleaners. In my family, I guess I'm kind of the oddball. Most people in my family are either school teachers or they're dry cleaners. I'm the only one in the financial business, so to speak. There's a few people that do other things, but we have a health club owner, which I'll talk about in a moment. But my uncle, who owns a dry cleaning business in the Chicago area, a couple of years ago, when natural gas was up near the 60 level, he was just telling me about how when he was actually doing this, or when he was actually looking at his heating bill from Nicor, the local natural gas company in the Chicagoland area, he about had a heart attack. It literally scared him and freaked him out so much that he thought he was going to have heart failure. Now, keep in mind, that was a few years back when we had kind of a natural gas bubble, so to speak. But the point is that it's something with which you need to respect. And my uncle, the fact that he needed to have natural gas to heat his boiler, that was a big expense for him. Now, he survived. His business, it's been a family business for over 50 years now, and they pulled through, and things are going well for him again. But the point is that's definitely something with which it affects you. Schools. Schools obviously, especially in the New York area and the Chicago area where Steve and I are from, you need to have natural gas to heat schools. And with that in mind, if we have another natural gas spike like we did about 3 years ago, the money's going to have to come from some area. So that's why it's important for this to play a role, not only schools, but for large factories, big buildings. Health clubs, it's another issue. My cousin owns a health club, and he actually owns a chain. He owns a chain of them, but in his case, a few years ago, he had one of his health clubs had a swimming pool in it. He since no longer has that health club with a swimming pool in it just because of all the overhead that was involved, even as natural gas was going down. But when natural gas was at its peak, it played a huge role in his business. So it's one of the areas to where he had to readjust, and it played a role in his business. Now, keep in mind, my uncle or my cousin never really had any desire to learn about the effects of natural gas, but it played a role in their lives, and that's the fact. Now, how can you actually trade natural gas? There's a lot of ways with which to do it. The first way that a lot of people think of is in the futures market. You can actually get very leveraged when doing so through futures, which can be good or bad, just depending on what you're looking to do with it. You can trade natural gas stocks. There's various stocks out there that have a tie-in to the natural gas market, to where if the price of natural gas goes up, a lot of times the value of the stock goes up. There's natural gas ETFs, with which we'll talk about today. There's one in particular that we're going to be spending some good time on, and that will be the FCG one. We'll be talking about UNG a little bit, and then we'll be talking about ways with which to trade options, not only on the stocks, but the futures as well as the ETFs. Now let's start by talking about futures. In the futures world, this is kind of the etiology of a lot of these products, in that this is where it all started. The futures market, folks, to give you an idea of it, I know it, I understand it to a point, but it's a very small part of what we do. And the reason with which I'm bringing this up is because this is an area to where you need to have knowledge of. You don't necessarily need to trade it. I've never traded a natural gas futures contract in my life, but you need to have knowledge of it. In the futures world, particularly in the natural gas world, if you were to trade a futures contract, you're going to get approximately 10-to-1 leverage. Now, trading a futures contract is something that's similar to trading a stock, in that the value of your portfolio is tied to the value of your stock. The value of your portfolio, if you're trading a natural gas futures contract, is tied to the value of natural gas. Now, with that being said, the natural gas contract is going to be around $40,000, meaning that if you were to buy a one lot on natural gas, you're going to actually have about $40,000 worth of natural gas exposure. Now, these are rounded, estimated numbers, so forgive me if it's not exact, but this is just to give you kind of an idea of it. The margin requirement is going to be between around $5,000 to $6,000. That's not quite 10-to-1 margin, but it's pretty close. Here's the kicker, and this is kind of one of the reasons with which we stay away from futures. There is no downside protection. So let's say you have a $4,000 account, great, or $5,000 account, great. You can trade some natural gas futures. You can lever yourself to kingdom come. But if natural gas were to theoretically go to zero, you don't lose $4,000. You lose $40,000. So with that, leverage can be good, but you can get similar leverage with options, in my humble opinion, but you have a limited risk. That is, of course, when you're trading long options. So natural gas is something with which you need to have an idea of how it works in the futures market, but you don't necessarily need to trade it. Once again, I'm not against it. It's just not the world with which we live at Know Your Options. Now, there is a mini futures contract that's a little bit smaller than it, but typically, like I said, it's a leverage game, and you need to know and have an understanding as to how to manage risk, and options are typically our preference in this business. Next, we have stocks. And we'll be going over this in a little bit more detail as we go, but I just kind of want to do an overview before we really get into the nitty-gritty of this. First question with which you need to ask yourself, how well do you know the company? A couple of years ago, there was a mutual fund that came out that was based upon micro-technology, meaning the small chip technology, so to speak. And the idea sounds like it's a pretty good idea, meaning it was one where, nanotechnology, to where what they were looking for were small motors, is what they were looking to invest in. So the idea of that sounded pretty good, and this was before the crash of 2008. And upon looking into that, the fund performed well, and it did great things, but one of the actual stocks within the fund that played a pretty decent chunk of it was General Motors. Now, with that being said, don't get me wrong, at the time there was a lot of people that had a lot of good things to say about General Motors, but the point is that did the fund actually match what you were trying to do? I don't know about you, but when I think about investing in nanotechnology, the first company that comes to my mind is at General Motors. So with that in mind, not only do you need to have an understanding of what you're investing in, you need to have an understanding of the company. Now, there's a lot of stocks out there that drill and mine for both natural gas and oil. And we'll be talking about that as we go on. But in order to invest in a company, if you want to have natural gas exposure and be in the natural gas business as an owner, so to speak, and by owner I mean stockholder, you need to have an intimate understanding of what the company actually does. And this is an area to where I think it's even more important to do even greater amounts of fundamental analysis, just because of the fact that you don't want to invest in an oil company when you're looking to invest in natural gas. So with that being said, there's some criteria that FCG uses, which we'll talk about a little bit later, that I think helps you in having an understanding of that. Now, the other thing with which you need to do, once you determine, is this company a little bit more on the natural gas side, or are they a little bit more on the oil side, how has the stock traded in the past in relation to natural gas? Now, on the Brokers Express website, that's the clearing firm with whom we broker all of our trades, you can actually do a chart overlay to where you can compare the performance of a stock to a futures contract or an ETF or whatever you'd like to do for that matter. So that way you can get a feel for what the relationship is between the performance of the stock as well as the performance of the commodity with which you'd want to invest in also, or at least have exposure. Next we have ETFs. Now there's a lot of ETFs out there that can really do a lot of good things for a lot of good people, or for a lot of bad people. I do a lot of bad things for a lot of bad people, I guess. The one with which I want to put our focus on today is FCG, and I like the idea that the ISE has a unique idea with FCG, in that they're looking to make exposure through a stock to the natural gas market. Now, there's various fundamental measurements for qualifications to get into this ETF, and we'll talk about those a little bit later. But the benefit of it is the ETF, it trades just like a stock. So if you want to have a diversified exposure to the natural gas market through stocks, and you don't want to do the fundamental analysis that I'm about to show you on picking an individual stock, FCG has a pretty good approach to it, and you can be pretty well diversified when doing it. And one of the best things about it is the fact that it is optionable. So let's go through options. Options are another way with which you can have exposure in the natural gas market. They exist on natural gas futures, so you can actually trade options on the futures. Once again, it goes back to the debate with which we'll be talking about today. Does it make more sense to invest in natural gas stocks or directly in natural gas itself? If in your situation it makes more sense to invest in natural gas itself, then you may want to consider looking into the futures options on that side of it. Now, an ETF that has gotten a lot of bad press is UNG. UNG is an ETF that actually tracks natural gas. It's very liquid, it is optionable, and it's something with which a lot of people have looked at in trading natural gas. Now, I have nothing bad to say about UNG, but to give you an idea of it, you just need to have an understanding as to how the product works. Little over a year ago, they actually were under investigation by the CFTC. And not for anything bad that they did by any means. They just became under investigation because of the fact that they got too big. They were too good at what they did, and that they had so much attention drawn to them. They were actually taking on positions that were big enough to control the whole natural gas market. So they had position limits put onto them. Now, what they've done since then is they're actually, the inside of UNG is actually trading swaps and things like that to try and mimic the natural gas market. Now, with that, originally what they were doing is they would just go long a futures contract and then take the remainder of the money that was invested and they'd put into some type of a fixed income strategy, something very conservative. And that can be good and bad. The good part about UNG is the fact that it's pretty easy to trade. The bad part is that you have some contango issues, meaning that you're going to have, they're rolling the futures contract within the fund itself. And so, once again, nothing bad to say about UNG. You just need to be aware of how it works. Now, FCG, that should be a G. That says a Q up there. It's a misprint. My apologies for that. FCG, the ISE ETF that tracks the natural gas stocks, it is optionable. And natural gas stocks also have options as well. So a lot of the option strategies that you hear about on other ISE webinars or other webinars with which you may see bull call spreads, condors, credit spreads, and that type of thing, covered calls, shorting puts, you can do them just as easily on FCG as you can on any other stock. Now let's talk about the relationship of natural gas and oil. For many, many years, this was a brotherhood in energy, so to speak, meaning that a lot of times natural gas and oil would move in a similar direction. Now, another thing with which you need to be aware of, most natural gas stocks have oil exposure and vice versa. Let's think about it for a second. If you're an oil company and you're drilling and you're looking to get a lot of oil, and all of a sudden instead of oil you strike natural gas, you're probably not going to complain. So a lot of companies typically go with oil drilling as well as natural gas drilling, and they basically sell whatever they find. One of the cool things about FCG is that one of the rules that they have in order to be in the fund is that you need to have at least 50% of your reserves in natural gas, so it makes you more of a natural gas company. Now, don't get me wrong, there's plenty of oil exposure within these natural gas companies that FCG has, but nothing's going to be perfect, folks. There's very few companies, I don't even know of any, that are big enough with which I would consider trading frequently that have only natural gas exposure in it. So typically, if you want to have diversification in the natural gas market, you're going to have a little bit of exposure to oil. The neat thing about what FCG does is it actually gives you various fundamental rules to actually get into the fund itself. Now with that, there's 30 stocks within FCG, and between their fundamental rules and the rule that says that you have to be in 50% of your exposure to be in the fund, that gives you at least some pretty good peace of mind on having natural gas. Now let's take a look at a chart. This is a chart that I did yesterday, by the way. Today it probably would have looked a little bit different, who knows. But what this is a natural gas futures contract. This is the March futures contract for natural gas. Now in the futures world, the front month contract is now in April, but I used the March contract just because it would be a little bit more historically accurate, so to speak. So on this is from about a month ago, and what I want to show you is how this is performed in relation to natural gas itself, and kind of explain a little bit of why, as to my theories as to why FCG has been performing a little bit more to the upside on this. Once again, this is from about a month ago, and if you look, till about the end of January, it's a similar performance in the stocks as compared to natural gas itself, based upon a percentage. Now, what happened at the end of January? Well, a couple of things happened. First thing, and this didn't happen at the end of January, this has kind of been happening for the last 6 months or so, we've had an extreme bull market. And one of the things that has helped these stocks, because you see the red line represents the ISE fund, and the blue line represents natural gas itself. So the first thing that's actually helped the stocks themselves is the fact that we have had a surging bull market. Now, obviously, today's not included in that because it's not on the chart, but that's one reason as to why we've actually had such a rise in this. Second reason as to why this has happened, there is oil exposure in these stocks as well. And around the end of January, we actually had an event over in Egypt that you guys might recall that sent oil prices up a little bit. So those are two of the reasons with which I think we've had a little bit of divergence lately between natural gas stocks and natural gas itself. But over time, this is something to where from my experience, I think that having the natural gas stock exposure does give you some legitimate natural gas exposure. Now let's take a look at another comparison. This is a comparison of crude oil compared to natural gas over that same time frame. Once again, these are both March futures contracts that we're looking at right here. But I wanted to show this just as kind of a little bit of a comparison on here. The red line represents crude oil. The blue line represents natural gas. So on this, you can see that they've tracked each other to a point okay, but you can see towards the end of January, the red line spiked a little bit with the events that happened in Egypt. But with that, you can see a little bit of a decline, but you can see a little bit of a spike in crude oil towards the end. So with that, crude oil is something that also held them up a little bit. Now, there's not a ton of, once again, it's going to be a majority of exposure with natural gas within these stocks, but crude oil definitely does play a role within this.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.